Welcome to Iraqi Dinar News, where you receive real and authentic updates about the Iraqi dinar. If you want to stay informed with moment-by-moment developments, make sure to subscribe to the channel and like the video. Today we are taking a closer look at an important development involving Iraq's leadership, international financial institutions, and the country's ongoing economic reform agenda. While headlines often focus on political meetings and diplomatic visits, the real significance frequently lies in the financial discussions taking place behind closed doors. In today's analysis, we will examine what these meetings could mean for Iraq's banking reforms, international financial integration, investor confidence, and the long-term outlook for the Iraqi dinar, while separating confirmed developments from speculation. One of the most discussed developments is the Iraqi Prime Minister's visit to Washington, alongside senior members of the country's economic leadership. Reports indicate that key officials responsible for finance, oil, investment, and economic planning are participating in meetings with major international institutions. Such visits are not unusual for countries pursuing large-scale economic modernization, but they often carry additional importance because they provide opportunities to coordinate policy with international financial partners. When an economic delegation includes ministers responsible for finance, energy, and investment, it generally signals that discussions extend beyond diplomacy. Instead, they often focus on economic cooperation, financial reforms, infrastructure investment, banking modernization, and mechanisms to improve international confidence in the country's financial system. These discussions can influence how international institutions view Iraq's progress toward building a stronger and more transparent economy. One subject attracting considerable attention is Iraq's interaction with organizations such as the International Monetary Fund, the World Bank, and officials from the United States Treasury. These institutions have worked with Iraq for many years on issues including public financial management, banking supervision, anti-money laundering measures, budget reforms, and economic diversification. The IMF's role is typically centered on advising governments regarding macroeconomic stability, fiscal policy, monetary policy, and structural reforms. The World Bank generally focuses on development financing, infrastructure, institutional strengthening, and long-term economic growth. The U.S. Treasury often cooperates with partner countries on financial integrity, banking compliance, sanctions enforcement, and measures designed to strengthen international confidence in financial systems. When these organizations engage with Iraq simultaneously, it generally reflects continued efforts to modernize the country's economic framework rather than any single isolated event. Financial reforms usually require cooperation across multiple institutions, because banking regulations, investment standards, government budgeting, and monetary policy are closely connected. Another issue receiving attention is discussion surrounding the Financial Action Task Force, commonly known as FATF. FATF is an international organization that establishes standards for combating money laundering, terrorist financing, and other forms of illicit financial activity. Countries are regularly evaluated according to their financial regulatory systems and enforcement mechanisms. If a country is placed under increased monitoring, often referred to as the gray list, it does not mean the country's financial system has failed. Rather, it indicates that improvements are needed and that authorities have committed to implementing specific reforms. These reforms frequently involve stronger banking oversight, enhanced customer verification procedures, better transaction monitoring, improved transparency, and closer international cooperation. For Iraq, making progress in this area is important because international banks, investors, and financial institutions generally prefer to conduct business in jurisdictions with strong compliance standards. Improved compliance can reduce transaction costs, increase investor confidence, and encourage greater participation by global financial institutions. It is important, however, to separate this process from assumptions about immediate currency changes. FATF-related reforms are primarily designed to strengthen financial integrity and improve the functioning of the banking sector. Although stronger institutions can support long-term economic stability, they do not automatically result in changes to the official exchange rate of a country's currency. Another topic drawing attention is the discussion surrounding Iraq's development plans and long-term investment strategy. Iraq possesses significant natural resources, including some of the world's largest proven oil reserves. Revenue generated from these resources provides the government with opportunities to finance infrastructure projects, expand public services, modernize transportation networks, strengthen energy production, and invest in industrial diversification. Large development funds are often established to channel resource revenues into strategic investments. Around the world, many resource-rich countries use sovereign wealth funds or development funds to stabilize government finances, support future generations, and finance economic diversification. Proper management of these resources can improve resilience against fluctuations in commodity prices. Reports suggesting substantial development funding should therefore be viewed within the broader context of long-term economic planning. While headlines may emphasize large dollar figures, the effectiveness of such funds ultimately depends on governance, transparency, project selection, and efficient implementation. Another point frequently discussed involves the handling of oil revenues through international banking channels. Iraq's oil exports are an essential source of government income, and international banking relationships play a significant role in facilitating payments for these exports. Maintaining strong relationships with internationally recognized financial institutions helps ensure that cross-border transactions occur efficiently and in accordance with international regulations. This contributes to confidence among energy buyers, financial institutions, and multinational companies operating within Iraq. Observers have also interpreted recent diplomatic engagement as reflecting Iraq's efforts to strengthen relationships with Western financial institutions while maintaining balanced international partnerships. Every sovereign nation seeks economic relationships that support stability, investment, and growth. Iraq's government has repeatedly expressed interest in attracting foreign investment, improving private sector development, and expanding economic cooperation with multiple international partners. For investors following Iraq's economy, diversified international partnerships can provide several potential advantages. Increased foreign investment may contribute to infrastructure development, technology transfer, employment growth, and improved productivity. Stronger institutional cooperation can also encourage greater transparency and better governance practices. However, geopolitical relationships are complex and constantly evolving. Economic cooperation should not be viewed as replacing one partnership entirely with another. Governments often pursue balanced diplomatic strategies that allow them to maintain constructive relationships with multiple regional and global partners simultaneously. One of the most common questions among Iraqi Dinar followers concerns whether strengthening international financial relationships automatically leads to a change in currency valuation. The answer is more nuanced than many headlines suggest. A country's currency reflects numerous economic variables, including inflation, productivity, fiscal discipline, foreign exchange reserves, monetary policy, balance of payments, investor confidence, political stability, and overall economic performance. Central banks typically consider all of these factors before making any significant adjustments to exchange rate policy. In Iraq's case, the Central Bank of Iraq has consistently emphasized maintaining monetary stability while implementing gradual banking reforms. Stability remains a key objective because sudden currency movements can create uncertainty for businesses, consumers, importers, exporters, and financial institutions. Modern banking systems depend heavily on credibility. Confidence is built over years through transparent regulation, reliable institutions, prudent fiscal management, and consistent monetary policy. As these foundations strengthen, international investors may become more comfortable participating in the country's economy. Another important factor is banking modernization. Iraq has been working to expand electronic payments, strengthen digital banking, improve financial inclusion, modernize payment infrastructure, and enhance banking supervision. These reforms help reduce reliance on cash transactions while increasing efficiency throughout the financial system. Digital payment systems can improve tax collection, reduce informal economic activity, strengthen financial transparency, and support economic growth. They also make it easier for businesses and consumers to participate in the formal financial sector. Improved banking infrastructure is particularly important because international investors often evaluate operational efficiency alongside macroeconomic indicators. Efficient payment systems, secure banking networks, and strong regulatory oversight all contribute to a more attractive investment environment. Short-term implications of the current meetings may include continued technical cooperation between Iraq and international financial institutions, additional agreements on financial reforms, banking supervision, development financing, and institutional capacity building could emerge over time. Such outcomes would reinforce confidence that Iraq remains committed to modernization. Markets generally respond positively when governments demonstrate consistency in implementing reforms. Predictability reduces uncertainty, allowing businesses to make long-term investment decisions with greater confidence. For Iraqi citizens, successful financial reforms may gradually improve access to banking services, increase opportunities for private sector employment, support entrepreneurship, and encourage economic diversification beyond oil production. Long-term implications depend on sustained implementation rather than announcements alone. Infrastructure projects require financing, planning, execution, and oversight. Banking reforms require legal updates, regulatory enforcement, technological investment, and institutional capacity building. Economic diversification requires education, innovation, and private sector participation. No single diplomatic visit can accomplish all these objectives, but such meetings often represent milestones within a much longer reform process. For followers of the Iraqi dinar, patience and careful analysis remain essential. Financial markets frequently react to headlines, yet lasting changes are usually driven by measurable improvements in economic fundamentals. Investors should therefore pay close attention to official statements from Iraqi authorities, the Central Bank of Iraq, the IMF, and other credible institutions, rather than relying solely on speculation circulating online. It is also important to recognize that currency policy is ultimately determined by Iraq's monetary authorities. While international cooperation provides technical support and policy guidance, sovereign governments maintain responsibility for their own exchange rate decisions based on domestic economic conditions and policy objectives. Another positive aspect of enhanced international engagement is knowledge transfer. Collaboration with experienced financial institutions enables governments to adopt international best practices in budgeting, debt management, financial regulation, and public administration. These improvements may not attract dramatic headlines, but they often produce meaningful long-term economic benefits. Foreign direct investment also depends on institutional confidence. Investors typically evaluate legal certainty, contract enforcement, regulatory stability, financial transparency, infrastructure quality, workforce skills, and political risk before committing capital. Continued reforms can improve Iraq's competitiveness in attracting international investment across multiple sectors. Beyond oil, Iraq has opportunities in agriculture, manufacturing, logistics, tourism, renewable energy, telecommunications, and technology. Diversifying economic activity reduces dependence on commodity cycles and strengthens long-term resilience. International cooperation can support these efforts by providing financing, technical expertise, and market access. Another important consideration is fiscal management. Responsible budgeting ensures that government spending remains sustainable even during periods of fluctuating oil prices. Building financial buffers during periods of strong revenue helps governments manage future economic challenges more effectively. Economic resilience becomes increasingly important as global markets experience changing energy demand, geopolitical uncertainty, technological transformation, and evolving trade relationships. Countries with diversified economies and strong institutions generally adapt more effectively to external shocks. For the Iraqi dinar, the broader story is therefore one of institutional development rather than immediate speculation. Progress in banking reform, financial compliance, governance, investment attraction, infrastructure development, and economic diversification collectively contributes to stronger long-term economic fundamentals. At the same time, it is important to avoid overstating what current developments guarantee. Diplomatic meetings and financial discussions represent opportunities rather than predetermined outcomes. Implementation, consistency, and measurable progress ultimately determine whether reforms achieve their intended objectives. Responsible analysis requires acknowledging both the opportunities and the uncertainties. Iraq has made meaningful progress in several areas of economic reform over recent years, yet challenges remain. Continued improvements in governance, financial transparency, anti-corruption efforts, infrastructure, and private sector development will all influence future economic performance. For viewers following the Iraqi dinar closely, today's developments highlight the importance of monitoring verified information rather than reacting to rumors. Official policy announcements, published reform programs, central bank communications, and credible international reports provide a stronger basis for understanding Iraq's economic direction than speculative narratives. As Iraq continues strengthening relationships with international financial institutions, expanding banking reforms, improving regulatory standards, and pursuing long-term development goals, these efforts may contribute to a more stable and resilient economy over time. Whether discussing compliance initiatives, investment frameworks, development funding, or financial modernization, each element represents part of a broader strategy aimed at improving Iraq's position within the global financial system. The coming months will likely provide additional opportunities to evaluate the practical results of these discussions. Observers should watch for official agreements, legislative reforms, banking sector updates, infrastructure announcements, investment projects, and communications from the Central Bank of Iraq that demonstrate continued progress. Thank you for watching today's Iraqi Dinar News Update. If you appreciate balanced, factual, and responsible analysis of Iraq's economy and the Iraqi dinar, be sure to subscribe to the channel and turn on notifications so you never miss future updates. As always, this content is provided for informational and educational purposes only. It should not be considered financial, investment, or trading advice, and viewers should conduct their own research and consult qualified financial professionals before making any investment decisions.